Macquarie Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Thursday. I'm Juliette Sarli. Great to have your company on a day when we saw markets retreat. We were expecting records potentially would be breached when we woke up this morning after we saw an advancement on US markets overnight, really lifted by the likes of Nvidia, GE Vernova. We had Google's parent Alphabet after the bell, and of course these hopes that the EU and the US appear headed towards a trade deal similar to what we saw with Japan, but instead we have seen quite a bit of weakness coming through in our market. A lot of that can be attributed to the likes of Macquarie falling quite substantially. Also looking like Macquarie's on track to receive a strike on its remuneration report. But more broadly, not a lot of momentum in most of the sectors today. In fact, when you look at the likes of consumer discretionary down 0.8%, telco off by around 0.8%, REITs and industrials also under pressure, and really only defensive healthcare moving higher today, up by around 1.3%. So that, of course, gets us to the fact that today was very much a day of profit taking. I mentioned, though, that Alphabet came through with its earnings after the bell. So on cloud nine for this one, it's blown past Wall Street expectations with its second quarter earnings coming in around $82 billion US, but also a massive $85 billion capital spending plan for 2025, which was well above forecast. So this is going to supercharge AI infrastructure. Alphabet betting big on custom chips and data centers to outpace its rivals like Amazon and Microsoft. So really the message here for investors was AI is expensive, but it is also worth it. And then taming the inflation dragon, we heard today from the RBA Governor Michelle Bullock, really warning that the central bank's preferred measure of underlying inflation may not fall as quickly as anticipated. So that's an indication that an interest rate cut next month isn't guaranteed. Now, the RBA is expecting headline inflation to fall to the lower end of its 2 to 3% target range next week, and it is anticipating it will pick up again towards the end of the year as temporary government electricity rebates expire. And Michelle Bullock was addressing the Annika Foundation in Sydney.
Our long-standing strategy has been to bring inflation back to target while preserving as many of the gains in the labour market as possible. This approach has meant that interest rates in Australia did not rise as high as they did in some other economies, and so we may not need to lower them as much on the way down. We also know that Australians continue to feel cost of living pressures, with the average level of prices now notably higher than it was just a few years ago. And that's why we want to make sure that inflation remains low and stable from here on in. Low and stable inflation is good for households, it's good for jobs, it's good for communities, and it's good for the economy.
All right, that was Michelle Bullock speaking in Sydney earlier. Let's have a look at some of the big corporate movers. I mentioned Macquarie Group. Look, it's on track to receive its first ever strike. Proxy vote showing more than 25% push against the executive's remuneration report. Now, that also comes as CFO Alex Harvey announced he'll be stepping down at the end of the year to retire. He'll be replaced by Frank Kwok, who's been with Macquarie for 28 years and currently serves as Deputy CFO. Quarter one profits also down, so all of that contributing to Macquarie shedding 5% today. Now, Bapcor also absolutely plummeting. Trading had been weaker than expected in May and June. Also, Bapcor announcing a $50 million in post-tax write-downs and the exit of 3 directors. Heading the right way though, Fortescue had a great session. It announced it shipped a record volume of iron ore in the year to June, also forecasting stronger growth in the next year. It's got lower production costs, but it did say that problems persist at its Iron Bridge project. Lynas Rare Earths up by about 4%. It signed an MOU with a Korean company, JS Link, for manufacturing and supplying permanent magnets. And Karoon Energy down by 3%, reporting a 25% year-on-year slide in revenue in the June quarter despite increasing production. Let's make sense of the day that was with Mathan Somasundaram from Deep Data Analytics. And Mathan, I mentioned a couple of the reasons why potentially the market went lower, but on a day when we thought we might hit records, what do you think went wrong?
Well, it's kind of like we've got these macro global events that's taking steam out of the market. And at the same time, we've had a huge run in some of the large caps, and the large caps are struggling. I mean, as you just said about Macquarie, when Macquarie struggles to perform, and it's probably the best bank in our market, our banking sector trading at multi-year high multiples doesn't actually make sense. So we've got a few issues in the overall multiple game, and I think the market's starting to worry about a few things because we've got a month away from our reporting season cycle. US is starting the reporting cycle, and we've already started to see some cracks appear in the consumer side of things with Chipotle coming up with a pretty weak result, and we've seen Bapcor in the local market. So that kind of tells you the consumer stuff is starting to worry people.
Yeah, and I guess we also heard from the RBA governor on that point too, but really just reiterating that they're not going to rush cutting interest rates if they don't think that that's warranted.
Yeah, I mean, she's been handed a poison chalice. Damned if she does, damned if she doesn't. The reality is, I think she's doing the right thing. Look, you've got a hammer trying to solve a very minute problem. So targeting is very hard for any central bank. And in RBA's case, the defense for them is they've got a market where 95% of the mortgages are variable. So we're more sensitive to what happens. But on the flip side, she's looking at asset bubbles in every category. We've got a debt-driven asset bubbles. We got historically low unemployment. So it's really hard for them to cut rates and say it's data-driven because it isn't. So at the same time, you've got all-time high asset prices. So it's really not there for the cuts. But you can also see how things are going down. I did find it funny how she said when inflation comes down, prices. First, she said the prices are still high, and when inflation is low, that's good for the consumer. No, it's not. Prices are still high, and they're still going higher. I do love the whole concept, how you can have huge price rises, and then prices are only rising by less. But anyway, to that point, I think she's kind of stuck, and I think she's keeping her options open. I mean, she said it that the inflation is likely to come down in the Q2 number, which is kind of expected. But the monthly number suggests that the Q3 is going to rise. What we're seeing in the US suggests, and the commodity prices suggest that inflation is probably going to rise. So I think she's kind of keeping her options open. And I think the market is expecting a rate cut in next month. But then again, that was the case last month, and that didn't play out. So who knows?
Yeah, absolutely. I was speaking earlier to Paul Brennan, the chief economist at Suncorp, who was going to the launch as well of the Annika Foundation. And I said, do you think that she might take a little bit of time to say, whoops, maybe we got it wrong? And he said, she's never going to say that. So yeah, we continue to push on and price in potentially an August cut. Let's go back to the market. The lithium sector very much coming back to life.
Yeah, there's a few shorts. Actually, let me jump on that. Paul Brennan, I used to work with Paul at Citi back in the day, and the Annika Foundation was because of Adrian Blood and Wicknell's daughter, Annika, and he used to work at Citi as well. So we all worked together. Paul Brennan is one of the nicest guys you'll meet. I don't know 100%. How he ended up in. I don't know how he ended up in broking. I tell him that every time. He's a smart guy, but he's one of the nicest guys you'll meet. Look, coming back to your point on the lithium, it's the same in uranium. Uranium ETF is at new 12-year high. Lithium ETF is bouncing, and for two different reasons. I guess with uranium, you're seeing it mainly because of data centers and AI. I guess the energy demands. The US techs are really going for the uranium play, and we're seeing expansion in Europe as well. So that's playing for them. When it comes to lithium, it's a bit like coal as well. We've seen supply cuts in China in both lithium and in coal because of low prices. Guess what? Low prices are now bouncing and you get higher prices. So it's going to be interesting to see because we've seen this before in a few other commodities. China comes out and says, we're going to cut supply. Prices bounce. So obviously, if the prices bounce, when you don't have to cut the supply so much. So it is one of those things, one kind of curbs the other. So time will tell, but as far as the stocks are concerned, there's a heavy amount of shorts. I mean, the top 4 shorted stocks are lithium and uranium stocks. So in that context, when you get any kind of supply shock and things bounce, things move very quickly because heavily shorted stocks can bounce really hard.
What more broadly have you been looking at in the resource space? Because we've been talking about the great rotation. I mean, Fortescue's quarterly update looked pretty solid.
Yeah, that's an interesting one with iron ore. China, everyone's nearly 2 to 3 years. Everyone's waiting for stimulus to rebuild. That didn't happen, but a big dam in Tibet suddenly got everyone excited. Iron ore moved up. Don't think that was going to be enough to move the dial. The social financing data didn't really give us that kicker. But look, FMG is good, but mainly because it's a low-cost play and it's low grade. So it's one of those ones when there's no demand, it can suffer quite a bit, and we've had a huge pullback. But the result shows they're still doing well, but the macro is still not there. I think it's an interesting play in the context in resources. You have to be pretty selective. We've been in Lynas for a very long time. I think that's a really interesting play. It's now a strategic asset, and you've seen the MP resources in the US get US government attention. I think Lynas is right down there, so I think it's doing really well in the rare earth space. I think gold sector looks really good. It does every 6 months. There's a consolidation phase, and then it runs. I think we're in the middle of that consolidation phase. It's going to be, we've seen some moves. I think it'll probably run again. The other areas we're looking at is energy. I think all parts of energy looks good. Oil looks good. LNG looks good. Coal with the supply cuts looks good. Uranium's obviously doing really well. So all parts of energy looks good. And food, the biggest stock in our market is Elders, and Elders is starting to run in the last couple of weeks as well. And remember, we're going into a reporting season, and Elders is out of cycle reporting. So for most fund managers, it's actually a good place to park your money because they're not going to be reporting anything during the normal reporting cycle.
Oh, interesting tip. Park your money in Elders. All right, Mathan, always a pleasure. Thanks so much. Have a great rest of day, Mathan Somasundaram from Deep Data Analytics. Well, getting to the stock specifics and more into Macquarie Group, that was the stock of the day on the call. Andrew spoke to Luke Larrative and Howard Coleman from Team Invest.
Probably I would sell it, simply because the thought of being in something like a bank doesn't fill me with enthusiasm. There are a lot of things I don't like, as you notice from this. Very, very small number of terrific companies that are not necessarily in the sectors that everybody thinks about.
Indeed. Look, I think Macquarie looks great. It's a good opportunity to have a little dabble at the share price on what the market's reading as a weak headline result. Business as usual for them, I would suspect, and that thing will keep grinding higher.
So a buy from you, Luke.
Buy from me, mate.
That was, of course, Luke Larrative from Seneca Financial Solutions. Let's have a quick look at the market leaders. PEXA had a really good session. Now, I do remember why. That was on an update and to do, I believe, as well with NatWest and the platform there. So sending shares higher by around 16%. Clarity and Neuron doing well. We mentioned that healthcare as a whole was really a place to hide today. And Zip also solid, up by almost 5%. Heading the other way, well, we talked about Bapcor and three directors exiting as well, down 28%. Boss Energy also announcing that its managing director is leaving the company. Shares down 6.4%. Bit of a switch out of some of the gold. We touched on Macquarie. Capricorn Metals also subject to a broker downgrade today, off by 4%. The small end of town, Calix had a good session, up by 31%, and heading the other way in the small end of town was American Rare Earths, off by 11.4%, and Step One down 8%. Looking ahead tonight, of course, it's about the ECB decision. Also, we'll monitor whether or not there will be some sort of agreement between the EU and US on trade. We get US data on jobless claims, new home sales, building permits, also the S&P global PMIs. And earnings include American Airlines, Deckers, Dow, Dr. Pepper and Southwest Airlines. A couple of quarterlies tomorrow, including Newmont, which will report, of course, in the US, and Whitehaven Coal, and Japan June Services PPI round out the week. Let's have a quick look at where the local market has finished. Down 0.4% there on the CBO 200, and the ASX 200 has finished 1/3% lower, 28 points. Importantly for those who love these metrics though, remaining above 8,700 points, 8,709 is where we finish. And as we mentioned, healthcare really the only positive sector, up 1.4%. REITs, industrials were the laggards today, along with financials, as Nathan was saying. If you see a stock like Macquarie go down, then it's going to drag the whole index down with it. That does it for today. We will be back from 9:45 a.m. Eastern tomorrow.